Good afternoon, ladies and gentlemen. The Monetary Policy Committee, MPC, of the Central Bank of Nigeria, CBN, held its 303rd meeting on November 24 and 20. The committee reviewed key developments in domestic economies to the outlook. The 12 members of the committee were in attendance. Decisions of the MPC. The committee decided by a majority vote to maintain the current monetary policy stance with an adjustment to the corridor as follows. 1, retain the monetary policy rate, MPR, at 27%. 2, adjust the standing facility corridor around the MPR at plus 50 to minus 450 basis points. 3, retain the cash reserve requirement, CRR, for deposit money banks at 45%, merchant banks at 16%, and 75% for non-TSA public sector deposits. And 4, keep the liquidity ratio unchanged at 30%. This decision was underpinned by the need to sustain the progress made so far towards achieving low and stable inflation. The MPC reaffirmed its commitment to a data-driven assessment of developments and outlook to guide future policy decisions. Considerations. The committee welcomed the continued deceleration in headline inflation year on year in October 2025 for the 7th consecutive month. This favorable development resulted from several factors, including sustained monetary policy tightening, stable exchange rate, capital flows, and surplus current account balance. In addition, the relative stability in the price of premium motor spirit, PMS, and improved food supply supported the pace of disinflation. However, headline inflation remains high at double digit, requiring sustained efforts towards moderating it further. The committee was, therefore, of the view that the steady deceleration in inflation across the 3 measures, headline, core, and food, in October 2025 suggests that the lagged impact of previous tight policy measures is expected to continue in the near term. Thus, maintaining the current stance of policy amidst lingering global uncertainties would allow the effects of previous policy rate hikes to sufficiently transmit to the real economy and further reduce prices. Members noted that the robust performance of the external sector, evidenced by the surplus current account and steady accretion to reserves, which have contributed to stability in the exchange rate and moderation in inflation. The MPC also commended the collaborative effort of both the fiscal and monetary authorities, which led to the recent upgrade of Nigeria's sovereign credit rating by major credit rating agencies and the delisting of the country from the FATF grey list. Members acknowledged that these positive developments would further boost investor confidence and improve capital flows to the economy. The committee noted with satisfaction the sustained resilience of the banking system, with most financial soundness indicators remaining within regulatory thresholds. Members also acknowledged the substantial progress in the ongoing recapitalization program, with 16 banks achieving full compliance with the revised capital requirements. The committee thus urged the bank to ensure a successful implementation and conclusion of the program. Price and other domestic development. Headline inflation year-on-year further declined to 16.05% in October 2025 from 18.02% in September, driven by a moderation in both food and core inflation. Food inflation fell significantly to 13.12% in October 2025 from 16.87% in the preceding month, reflecting improved domestic food supply, stable exchange rates, and base effect. Similarly, core inflation slowed to 18.69% year-on-year in October 2025 from 19.53% in the preceding month, owing largely to a decline in the price of furnishing and household maintenance. Real gross domestic product, GDP, for the second quarter of 2025 sustained its positive trajectory, evidenced by the growth rate of 4.23% year-on-year, compared with 3.13% in the first quarter of 2025. In addition, the Purchasing Managers Index increased significantly to 56.4 points in November 2025, the highest in the last 5 years, pointing to a more positive growth outlook for the third and fourth quarters of 2025. Gross external reserves increased by 9.19%, reaching a high of $46.70 billion on November 14, 2025, from $42.77 billion at the end of September 2025, sufficient to cover 10.3 months of import for goods and services. Global developments. Global outlook is projected to recover in the near to medium term, underpinned by improved trade negotiations, accommodative monetary policy, especially in advanced economies, and easing geopolitical tensions. However, headwinds to the outlook include the potential for increasing protectionism, geoeconomic fragmentation, and likely resurgence of trade tensions between the US and its major trading partners. Global inflation is expected to maintain a steady decline through 2026 on the back of the combined impact of past monetary tightening, gradual stabilization of the global supply chain, and softening commodity prices. Inflation is, however, projected to remain above pre-pandemic levels in the near term. Outlook. The committee's forecast indicates a sustained disinflation in the near term to be largely driven by the lagged impact of previous monetary policy tightening measures, supported by the continued stability in the foreign exchange market. In addition, the ongoing seasonal harvest cycle is expected to boost local supply and further moderate food prices. The MPC reaffirmed its commitment to evidence-based policy approach towards achieving the bank's mandate of price and financial system stability. The next meeting of the committee is scheduled for Monday, 23rd and Tuesday, 24th February 2026. Thank you.
Thank you, Mr. Governor. Number 160, presented by the chairman of the MPC and the governor of the Central Bank of Nigeria, Mr. Olaide Kadusu. As per the norm, we take questions from members of the press. Please state your name, your region, and ask your question. Nancy, one question.
I don't know if this will be one question because this is the last MPC for the year. Good afternoon, Mr. Governor, members of the MPC. I'm Nancy Najimoni Nancy from the Governor, by this time last year, headline inflation was at around, I think, about 34%, if I'm not mistaken, around 34.6% peak in November last year. So where it is right now, around 16.05%, as we been told by members. For many Nigerians, they are still not feeling the relief of this inflation. And Governor, we have to tell you and your team this, because this is actually what we hear from Nigerians that we speak to. They are not yet feeling the relief of this inflation and the macro gains. As housing costs, rents, I'm sure you all know, rents even here in Abuja, across the country, people are paying rent in excess of 100%, 200%, 300%. My question then is, as a monetary authority, how is the Central Bank of Nigeria ensuring that the macro stability gains that we have been getting, at least in the last 1 year, translates into real and tangible relief for most vulnerable Nigerians and households? Thank you, sir.
Thank you very much. Thank you very much, Nancy. Yes, you're absolutely right. Happily, the macro is looking a lot better. and you've identified it quite rightly. Inflation has come down steadily. You're right. This time last year, we're talking of 34 plus, and now we're down to 16. Now, I think, to your point, the issue of macro stability and the gains of macro stability. To my mind, this is the core of the matter, that to the extent that we have accomplished stability, stability is a very fundamental process in the road to growth. You will recall, a year and a half, 2 years ago, there was a lot of instability in our markets. And when there's instability, those who would normally invest hold, they stay away. Now we have moved from a situation where there is stability, and after stability comes investment, and after investment comes growth. And by the way, investment and growth could go hand in hand. Good, because it depends on which sectors you are looking at. And if you look at the sectors, you will see that over the course of the last couple of quarters, there has been growth. There has been. But the fact that we are now accomplishing stability gives greater confidence to investors who ultimately will invest. And so the growth and some of the issues you are talking about now become issues that are easily taken care of. And I'm almost certain that in the fullness of time, you will begin to see exactly what I'm talking about, that this is the way stability has a way of promoting growth and ensuring that it is stable and enduring growth, which is what we really need. What we don't need is anything that is short-term and cannot be sustained.
Good afternoon, Mr. Governor. My name is Nduka Chejina of the Nation newspaper. Mr. Governor, so Nigeria's external reserve now stands at $46.7 billion. This is the highest in about 7 years. So, to you, Mr. Governor, what are the principles driving this growth, this accretion to the foreign reserve? And how does this compare with the reserve adequacy you consider optimal for Nigeria's external buffer, especially in the light of recent shocks?
Thank you very much. Well, firstly, let me answer the second question with respect to buffers and where we are on that. Right now, we're about 10 months import cover. And that is a good place. And to be frank, it is even more than it appears. It's more than it appears because you have a situation where there's significant liquidity within the market that unless you are a regular, we see that the reserves have gone up, respectively. There's definitely a lot more that surrounds that. Now, in terms of what have driven this, well, clearly we can see that, and it's something I've said in previous MPC meetings, that with a more competitive currency, you have a situation where there's more exports. There's a drive for greater exports, and that's why you find that increasingly being the case for non-oil exports. Of course, for the oil exports, there have been increasing production, and we have come a long way from where we previously were on that particular line. Then, of course, you go to the IMTOs, the international remittances, all those have gone up relatively positively. And the good thing about all this is that we are building the reserves on a very systemic basis. Of course, because of the reforms that we are undertaking, portfolio investors are finding investments in Nigeria attractive, and they are coming to invest. So collectively, all those have contributed. And of course, we are operating a more open and transparent system, which gives confidence to those who really and truly want to be in a country where they believe in its future. I don't understand what you're saying.
Good afternoon, Mr. Governor. My name is Major with this day. With a spread of less than 2% between the official and BDC rates, it can be said that the Naira is currently stable. How can you guarantee that this stability is market-driven and not policy-driven to offer temporary success? What specific reform or market mechanism are ensuring stability? Thank you, sir.
Now, again, let me go back and say something about our foreign exchange market. You see, what we have in the foreign exchange market in Nigeria today, to the best of my knowledge, is something that hasn't happened before. It hasn't happened before, in the sense that you have a market where there are willing buyers, willing sellers. They come in, they buy at will, they sell at will, and you have a process that is open and very transparent. And our EFEMS system is one that is open and very transparent. So you can see who is buying, you can see who is selling. It is that that gives confidence to markets. And it is for that reason that on average, on a daily basis, we have $500 million in turnover, in market activity, with many times the CBN not being a participant in that market. For those of you who will remember how markets used to operate in those days, if the CBN does not intervene, nothing happens. That is now a thing of the past. We have a market that is open, that is transparent, and that plays in accordance with certain rules that everybody has signed up to. So these are all the things that have contributed to the way and manner in which our foreign exchange market operates, and which we have had stability in that market. You're right with respect to the differentials in foreign exchange rate, which is now down to about 2%. And if you recall, at one point in time when we started, it was more like about 60%. Now we've gone through to a situation, we've crossed that bridge where few people don't make differences in the foreign exchange at the expense of others. Everybody has equal access to a market that has become very, very open and very transparent, and where there's willing buyer and willing seller, and you're free to come in and live as you like. So these are some of the things that have definitely contributed to that. It's a more disciplined market. It's a far more disciplined market. There's policy consistency. There's an avoidance of policy flip-flops, so that those who are part of that market understand where things are going to, they can predict, and they can plan. Those are things that have made for a more functional foreign exchange market. And I think I would, make bold to say that for those of you who are constant travelers, you would have seen the benefits of that. Because when you travel now, gone are the days where you have to front load and be looking for foreign exchange all over the place. Those days, I'm sure many of you witness it. You can go with your Naira card, You can pay with your Naira card. If you choose to pay with your your dollar debit card, well, that's your choice to make. But the choices are there. And the fear that used to permeate that industry and that market has literally disappeared. In actual fact, Nigerians now are very happy and very proud to hold the Naira. A good thing.
Sir, my name is Maud. I'm of Vanguard.
Yes. Yes.
The government and, of course, the team have celebrated the removal of Nigeria from the grey list of the Financial Action Task Force. I want to know how, in practical terms, will this removal affect the inflow of trade finance, of foreign investment, as well as remittances from Nigerians abroad into productive areas of the sector?
Thank you very much, Ina. Thank you. Now, let me say that the removal of Nigeria from the grey list is way beyond just a compliance issue. It's way beyond just a compliance issue. In actual fact, that is the easy bit. That is the easy bit, to be able to say, oh, we have complied. We have complied. But it has a lot of implications for Nigeria and Nigerians. As you know, for the past over 2 years, we have been on this grey list from FATF, which is the international body that more or less tracks and monitors illicit flows. Our exiting of that is a clear demonstration of the fact that, one, Nigerian agencies, and I must say this, collaborate very well when they choose to surmount problems. They collaborate very well. The central bank, NFIU, SEC, EFCC, Ministry of Finance, we can mention all of them. All the security agencies, incredible collaboration. And this is one of the things that was given special mention when the FATF team came to Nigeria for the final time before deciding whether to remove Nigeria from the list or not. It was cited as the #1 issue, that they could see close collaboration between all the different agencies, and the Vice President of the Federal Republic himself came personally, chaired the event, and commitment from Nigeria exit that particular grey list. So it is not something to be taken lightly. The bigger challenge is to maintain what we have been able to accomplish. In a similar way, I spoke about stability. When you are able to achieve stability and you want that growth, which Nancy spoke about, you must do everything possible to protect it. If you fail to protect it and you go back, you bear the consequence. The FATF grey list, we talk about us being on it 3 years ago. Before that, being off it, we were on the grey list 3 years ago. Before that, we were not on it. Let's remember that. We were not there. So certain things happened that made us now go onto that list. And there are positives, to answer your question, for not being on that list. One of which, of course, is that it shows that you are prepared to meet minimum global standards, which is very important. Minimum global standards. It's like the rating agencies. When rating agencies come and they give you a positive outlook, everybody else follows that cue and say, well, if they have done their work and they have been prepared to do this, it's got to be good. It has met a certain standard. It's the same. The exiting of Nigeria from the gray list is a very positive signal to the international community, to investors, even for international correspondent banks who deal with Nigerian banks. Once you're on the gray list, they're a little bit more, well, actually, very much more reticent to want to deal with banks. But once you're off that list, it makes them more likely to want to deal with you, and pricing becomes more competitive. Similarly, for those who inflow the IMTOs, the international remittances, when you're on that list, you're almost like a pariah. When you're off it, you find that international financial actors are more willing and able to negotiate pricing with you and to ensure that they deal with you as they will deal with others. So the long and short of that is that I believe this is a good thing for Nigeria. It contributes significantly to the bottom line of all the different economic actors. And for our country itself, it promotes financial system stability.
Good afternoon, everyone. My name is Musa Okoka with NT. Mr. Governor, with just about 4 months to go in the bank recapitalization, we would like you to give us the status of the exercise and the status of the industry as well.
Well, let me again say that we talk as central bank about creating buffers. We talk about creating buffers. And we have been doing so, as you have seen, over the recent past. We have been doing this. So with the commercial banks, they too are in the process of creating buffers, because this is exactly what comes as a result of the recapitalization that they are presently going through. 16 of them have fully complied. 27 of them have, through various means, raised capital. We are monitoring the developments, and from every indication, it is going in the right trajectory. We feel that we are in the stage of building a financial industry that will be very, very, very fit for purpose in terms of building, one, what we spoke about earlier, the buffers, and also being able to support the country into the next years. Many of you will also know that many of our banks are out on the African continent, and they have been innovative in various spheres. Again, these buffers that they are creating will help them to be in a position to better navigate the risks in the multiplicity of countries in which they operate. And in return, that helps the Nigerians as well, the Nigerian traders, the Nigerian individuals who go across all these various geographies. It's a thing, it should be a thing of great joy and satisfaction to know that you have your own banks out there that understand your peculiar needs and are able to respond accordingly.
Mr. Governor, good afternoon. The cooperation or collaboration between the monetary authorities seem to be visible basically creating the right results, at least for economic watchers. So, how do you hope to sustain this collaboration to ensure that we now have a better economy for Nigerians, at least for the good health of the Nigerian economy? Thank you.
Thank you very much. I think it's very, very clear to the monetary and fiscal authorities that the most efficient and effective way for us to achieve our objectives is for a joint collaboration. And you will see that in operation in many spheres, including the ratings agencies and the outcomes of the rating agencies. It's a very collaborative effort. The FATF, exits of FATF, extremely collaborative. We are very fortunate that we have the position of the permanent secretary of the Ministry of Finance as a standing member of the MPC. So that also is something that we don't take lightly, given that it is the leadership of the fiscal authority that sits here. And then, of course, further down the line, across different parts of both the CBN and the Federal Ministry of Finance in particular, we have joint committees that work together. They meet regularly and they work together. The other thing I will say that is very important, and I think is particularly important for the press to perhaps monitor this as we go along, and that is, you often have heard us talk about the move to inflation targeting. That move to inflation targeting requires the utmost collaboration between the fiscal and the monetary authorities. In fact, some would argue that you're not likely to succeed if you're unable to collaborate effectively. So we are well on that path. We are well on that path, and we will do all that is in our power to ensure that the collaboration continues. It is that collaboration that has brought the stability, and we all know what it means for stability. We are not about to lose that for any reason in the world.
Thank you, Mr. Governor. I have two questions that came to me.
Sure.
One is from Ichi Usi of the Sun newspaper. He said, Mr. Governor, we know the CBN under your watch has returned to orthodoxy and chosen the path of being a catalyst rather than a direct interventionist institution. Is this model working? And how are you addressing legacy issues?
Thank you very much. It's a good question. And before I answer whether it is working or not, I think it's important to give context because it's oftentimes very, very, very well misunderstood. Now, we did a survey, a small study of interventions in the central bank. And we came out with certain numbers, which showed that total amount of about 10.93 trillion naira, 0.93 trillion naira, which goes back maybe perhaps 2010, 2013 or something. Okay. Now, out of that, because interventions are interventions, out of that, we still have outstanding of 4.69 trillion naira. 4.69 trillion naira. Okay, which represents about 43% of those interventions. Since we have come, we've been able to rein back about 2 trillion. We've been able to rein back about 2 trillion. Now, this is a humongous amount of money. So what is still outstanding really and truly ties our hands in terms of additional interventions. I think I have to make that very clear, because you go in a direction that will easily destabilize your economy, as indeed happened in the past. So we are having to take time to bring and rein in all these excessive interventions that, had a way of heavily distorting our economy. So from that, my answer to your question is a very simple one. It is working. And why is it working? 2 reasons. One, because I can't do any interventions, my hands are tied anyway. And 2 is the fact that as a catalyst, which you mentioned, as a catalyst, to what extent are we using our convening power, because that's what it is really, using our convening power to encourage those who should be in the development space to be there. And we are doing that. And the reason we are doing that is because if you look back at the model of intervention and the way interventions were being done, they had certain elements in them which were very discouraging for those who should, by very nature of the business, be doing it. And why is that? Because if others are doing it, like the central bank, at the rates that they are doing it at, why would anybody else think they can compete with the central bank? They can't. While what we want is the incentive for them to be creative, innovative, come up with new products, think outside of the box. Those are add-ons that we as central bank believe we are doing and will continue to do. Also, there's moral hazard. If you take money, it's money to be returned. It's not money that you take and put in your pocket and walk away. So those are the dysfunctions that came in from the intervention as you know it. And what we are doing is beginning to bring a new mindset into development. So when we say we pull back from those interventions, we had no choice, because all that amount of money is out. So we have no choice. But we're not resting. We're reaching out to others and seeing how we can support them to be able to make a meaningful impact in that sector, and do it in a way that makes sense and is win-win for everybody. That is the key. And don't forget, because it's important to say this, we as central bank, we have convening power. There are many institutions outside. When they come to Nigeria, we are the first place of call. And we can move them in the right direction. And the monies that, over time, the kinds of monies that played in that sector, if we get it right, we know we can do much more than was so in the past. But it has to be done properly. And it has to be done responsibly. And that is basically where we come in. And that is what we have been doing. So to answer your question, so far, we're doing it in a way that serves the best interest of all Nigerians.
We have another question from you, of this day. Said, Mr. Governor, without prejudice to your speech at the annual bankers dinner, billed for this weekend in Lagos, the third since you assumed duty as governor, what should Nigerians expect from the Cardoso team in the months ahead?
Wow. Well, let me first reiterate our vision. Our vision really is to be a trusted and respected central bank promoting confidence in the economy. Trusted, respected, confidence. Trusted, respected, confidence. I believe that the reason why we have seen a turnaround in the fortunes of the central bank and in the financial system is because we've become trusted and respected. But it's a moving target. It doesn't stop. And with trust and respect comes confidence. Confidence doesn't come without trust or respect. Confidence comes from being transparent, from being open, from being honest, and from having consistency in policies. That is what attracts confidence. So for me, I would say that we will continue to do and even deepen and ensure that anything that stands in the way of getting towards the goal of creating confidence, that we root it out. That we root it out. I also want to really commend the Chartered Institute of Bankers for organizing the forum that you speak about, because we should also recognize the fact that a forum like that contributes towards transparency. You have an opportunity to address people. You have an opportunity to inform people. And these large are some of those who are more advanced in understanding the very critical issues that we deal with. And it's a good thing, because one option would be to run away and say, oh, I'm really too busy, I don't want to meet with them. No, it's a good thing. And I discovered this, certainly the last one they had was televised and was broadcast widely. So, to my mind, this all plays into what I've been speaking about with respect to transparency of a central bank and the need for us to be able to ensure that at all times we get the confidence of people, we have the confidence of institutions, we have the confidence of all the foreign actors, the economic actors. They've got to understand the things we're doing. They've got to know that the decisions we make are decisions in the best interest of all Nigerians. And it is something that we will continue to do. Other than that, if you want to know more, please come to that event.
Thank you, Mr. Governor. I want to apologize for those few questions we couldn't take there too many. Thank you all for coming. This brings us to the end of the presentation for the year 2025. Thank you all for coming, and see you in February 2026. Thank you.
50. Good. Very good. Talk too much.